Hello, everybody. This is Brad Reed. I am a real life trader, and I'm here reminding you to be good. And by good, I mean get out of debt, achieve your financial dreams, and give generously to your community. Thank you guys for being here, and thank you for the many people that have sent me text messages saying congratulations and good luck and all that for the webinar series. This is something that I've been wanting to do for years. So thank you to Real Life Trading, Jeremy Newsom, Angie Barbosa, Johnny Guarco, and Albert for you guys supporting me and letting me do this. Thank you guys for being here. I am excited. Okay, I'm going to take a big breath, and then let's go crazy. Because hey guys, everything is awesome. I imagine the people that are here, and if you guys are here, go ahead and type in why are you coming to this webinar series? Are you in debt and want some tricks on how to get out of debt? Are you just trying to button up your financial plan? Are you looking for a few tips and tricks here and there? Go ahead and start typing in the things that you're here for, and I will be sure and emphasize those things as we go on. But I imagine a lot of people that are going to watch this video, they are trying to get out of debt. There is a lot of stress associated with financial matters. 50% of Americans struggle with money, and there's just a lot of people out there that don't know how to properly manage their finances, and I was one. I still have room for improvement, but that's what we're going to work on here today. But realize as you are going through life that 2 out of 7 people have no food today. A little bit more than 6 out of 7 people on our planet don't have access to meat in a day. So if you have access to a computer and you can watch this, you are in the upper 95% of successful people on this planet. So enjoy that, be grateful, enjoy what you have, and then let's go out and crush it and get some more stuff. David says, information brings knowledge and an advantage. That's awesome. I love that. So thank you guys for being here. There's more folks that are filing in. Almost 100 people registered for this webinar. And I apologize, I'm not able to do it in the after work hours, but I've got family commitments that I got to do. So thank you to all of the technologies that are out there that we can record this and get this going. And speaking of being grateful, I got my dad here with me. My dad is a stock trader, a real life trader. He sometimes goes by Ed and sometimes goes by Randall, but Dad, thanks for being here. My dad is going to.
Okay, Bradley. Congratulations on your new program here.
Thank you. I will try very hard not to mess it up. All right, so that's been a long intro. I want to get to it because one thing that really bugs me when I'm trying to get some information is people blabber around and spend a lot of time on nothing. So speaking a lot of time on nothing, the very overpriced and overpaid lawyers want me to remind you that the content of these videos is generalized education and theories. It is not specific for any one person. Like I said, there's close to 100 people registered for this video. It's going to be put up on YouTube and Facebook. There's no way I can be delivering individualized specific advice for any one person. So if you are looking for that individualized and specific advice, please see a competent professional in your area, and that will make the lawyers very happy. All right, there's going to be a lot of stuff over the next, I think it's 11 weeks, 13 weeks, 9 weeks, bunch of weeks, and there's going to be more than you can remember, so here's what we're looking for. Success equals opportunity plus preparedness. You are not able to be successful unless you have both opportunities and preparedness. Now, opportunities, we can talk about if you can create opportunities or if they just happen to come, but certainly preparedness is in your wheelhouse. I'm going to take a wild guess and suggest that most people that are watching this video would like a successful retirement, or they want a successful financial situation from year to year, week to week, day to day, and you cannot do that unless you're prepared. And I would argue that the reason most people struggle with money is that they've never been prepared. I know I was not prepared, and I had to get prepared, and I am prepared, and now I'd like to share that preparedness with everyone else. Part of being prepared means having a plan. Oops, wrong computer. There we go. Having a plan. So there's a lot of stock traders here. There's a lot of stock traders that have signed up for this. And if you are with real life trading, you know that we have a plan before we get into any stock trade. Where are we going to get out if it goes against us? Where are we going to get out if it goes in our favor? Are we going to do options? Are we going to do shares? You know, we have a plan. A lot of folks are just getting back from vacation, either from Labor Day weekend or from summer vacations. I bet you planned your vacation. Yesterday I went to the grocery store, and before I went to that grocery store, I actually had a plan. For the first hour of the morning, most people have a plan. And what order are you going to do things, from getting out of bed to working out to eating breakfast, taking a shower, getting dressed? Most people have plans on this. The truth is that most people spend more time planning one vacation in their life than their entire retirement. And so then they get to their retirement age, or that age in where they want to be retired, and they had never prepared. And so when that opportunity comes, it goes on right by and they cannot be successful. And also, you want to have a plan for each paycheck, and we'll talk about how to do that a little bit today and over the coming weeks. So when you're watching these videos, start working on your plan, your financial plan. And the big part of every financial plan, if you want to be successful with money, is that you have to spend less than you earn. It's much easier said than done. Credit cards are prevalent in our society. We are always being told that if we want to be more successful, better looking, more attractive to the opposite gender, or whatever your preference is, if we want our cars to drive better and our clothes to look nicer, we have to have a good credit score. And a credit score just means that you take out a lot of loans and pay them back. But when you're taking out a loan, you're usually spending more than you earn, not less than you earn. So it's very important that you spend less than you earn if you want to be successful with anything financial. And then retirement, most people have an age that they've picked up for retirement, and that's absolutely completely wrong. Your retirement needs to be the point at which your expenses and your spending is less than the rate at which your money grows plus inflation. So if you have money in a savings account or an investment account, that money should be growing. As long as you can spend less than the rate that money grows with an inflation factor thrown in, you can retire. I had a buddy that retired at age 35 because over his first 15 years of making money, he saved just about everything. He learned how to invest very well, and he said, you know what? With as much as I'm making each year off of my investments, I'm spending less than that. And yeah, he quit his day-to-day job, and he still, I guess we'd call it work, but he picks up jobs here and there and negotiations and does contracts, but he does whatever kind of work he wants. So these are the takeaways. These are what I want all of you guys to be looking for out of the next couple of minutes, hours, weeks, however long we're here. Questions, comments, or concerns, go ahead and type those in. And when I was putting these videos together, football season's coming up. So I am a fantasy football freak. And Marsha Taberman, thanks for being here. Better late than never. And it's being recorded. So yeah, can't wait for you guys to see the recording. But, if you're going to play in a football game, or even if you're going to play in a fantasy football before the actual event, this is where you're studying, you're learning, you're practicing, you're getting all your skills ready, you are understanding the concepts, the purpose, you're kind of putting the game plan together. And, whether you're going to run a race, whether you're going to go on vacation, whether you're going to play in a football or a basketball game or whatever it is, there's a preparation period that happens for days, weeks, or months before the actual event starts. And that's what I've got up here at the top. That's this video and the next two. 3 concepts you can't live without, and do's and don'ts with your money. Then we get to that pregame. So if you're running a race, this is the day before the race or the moments before the race. Or if you're playing in a football game, this is what you do, and this is what you eat, and this is what you dress, and this is where you need to be at a specific time. If you're going on vacation, this is, the when you wake up and you're putting everything together and getting everything in the car, whether you're driving or going to the airport or whatever. Then there's the part where you're winning. This is when the event started, the race has started, the game has started, your vacation started. There's things that you're going to do when you're being successful with your money, and then there's the victory stage. So even when you run a race and you cross the finish line, there's still things to do. If you won medals, you need to get the medal, and you need to have a place to put your rewards. You need to recover from the race. You need to hydrate, and you need to eat. And just because you have completed the event doesn't mean that your work is done. So that's kind of how I've organized this, and keep that in mind as we go along. Now, for those of you that are new to real life trading, you can go over to www.reallifetrading.com and check it out. We send out stock reviews with trade setups several times a week, and there are entries, stops, and targets, and these are trade setups that we're doing with our real money, and we'll tell you everything you need to know in order to do that trade setup. If you want to receive those in your email, there's an account button. Actually, I can just swing over there, I think. If you click on this account button right here, go to sign up, we will email you those. Otherwise, they will appear right here, like this trade on Humana that we did today. And then also on reallifetrader.com, you'll see there are hundreds of articles and videos up here that you can take a look at. There is free education on becoming a stock trader. Whether you are a beginner or you're a seasoned pro, there's something for you here. If you want to be a long-term investor, or if you want to be an option day trader, there's things for you here. This Retire on 3K is probably one of the most successful articles that Real Life Trading has been very, very popular. So if you have not yet seen that, swing on over to reallifetrading.com, click on education, and then click on Retire on 3K. And then if you go over here to live rooms, if you want to watch Jeremy and I trade our own money, and you want to see and hear us talk about a trade we're about to get into, you can sign up and watch us do that. This one down here says, since we started tracking the trades in February 2nd, we're up 156% year to date, and that's just with the day trades. Credit spreads are up, swing trades are up. Yeah, so that is that. Questions, comments, concerns, go ahead and swing on over to reallifetrading.com or type them in the chat pane. What else we got? Future videos. Be aware that these are coming. How to buy a car, how to buy a house. And then, of course, the whole, can I retire now, or when do I retire, or how do you evaluate your current situation to retire? And we will be talking about investing for retirement and answering those questions here in this video series later on towards the end. And then one thing that Jeremy and I are excited about, this will probably happen maybe Q1 of next year, is financial fundamentals for artists, athletes, and dreamers, models, cooks, chefs, those folks that for years and years, they have to grind it out, and they put a lot of their income back into their craft. I was a musician for many years, played with a number of bands, and musicians that are trying to become professional musicians or singers or whatever, they can go for years and years, and they put 50 to 80% of their money back into their career, whether it's buying equipment, taking lessons, traveling for low-paying gigs, but want to give those folks a series of lessons on how they can be successful with their money and be sustainable, so they don't have a certain timeline or a certain debt limit that they run into when they have to give up on their dream, but they can be sustainable. And then, of course, a lot of those folks, once they do make it big, they make an obnoxious amount of money compared to what most people receive, and they need to be smart with it. They need to put things into savings, and they need to not go buy the big ritzy houses, because we see all the time 66% of professional athletes file bankruptcy within 3 years of retirement. 90% of lottery winners file bankruptcy within 1 year of winning their lottery. And it kind of goes back to those things we talked about before, because they spend the money faster than their investments are growing. But the thing about these folks, artists and musicians and athletes, they may not know when they're going to retire. right? They may get injured. Someone may write a bad article about them that goes viral on social media. It may be serious, it may be silly, but a lot of them don't know when they're going to retire. So most of us are going to be working for 30, 40 years and be retired for 30 or 40 years. These folks may be working for 2 to 5 years and be retired for 50. So at any rate, that's coming. Let's get on to today's agenda. I'm going to talk about my journey through the valley of debt. I was in a lot of fear, and we'll talk about how I got out of that. We'll talk about that managing your money is a skill that you need to learn. It's not information that you can just read or just listen to a video series. It's something that you have to learn and how to do that. Then I want to talk about how rich people handle money, and that'll kind of set up the basis for the rest of the series. We'll talk about the steps up the financial ladder that people will accomplish, and we'll talk about how to do that through the whole series. And then there's some homework. Oh no, didn't know you're going to have homework. Well, it gets worse. All right, so my journey into $220,000 in debt starts in May of 1998 when I graduated with an MBA from Texas Tech University. I had a job with IBM. They were paying me $57,000. I have no idea why, but that's what they agreed to do. And I had about $20,000 in student loans. So most of you are saying, wow, Brad, 20 grand in student loan with a huge salary like that, you were probably debt free within 6 months to a year. And you are exactly right. That's what I should have done. But within about 2 weeks, I bought that Jeep Cherokee that you see in the picture. A few months later, I bought the boat, and the boat is just an especially stupid purchase because I had done summer jobs with IBM, and I don't really remember how, but I had some shares of IBM stock, and that stock was worth about $4,000. When I went to buy the boat, I was going to make a $4,000 down payment. I had this brilliant plan. I used a credit card for the down payment on a boat. I had the stock. I was going to sell the stock, and then I'd get $4,000 worth of points of whatever it was from the credit card, and I was going to get them. So I made the down payment. I signed up for $4,000 worth of debt, and then IBM had earnings that evening, and the next morning when I went to sell the stock, it had crashed by 25%. So I no longer had the money, and of course most people, stock traders, and I know this now, are saying, wow, if it went down that much, you should have sold it while you can because it was probably going to continue downwards. And it did. And did I sell it? Of course not. So while my investment that I was going to use continued to crash, the debt that I had acquired continued to grow, and this was the cycle for about my first 10 years out of school. And then if you see the house behind the boat, I bought that. And most of you guys know, hey, when you buy a house, you have to put 20% down. And of course, I put 5% down. And so I got into all kinds of mortgage insurance and bad rates and all kinds of stuff there. Some pictures of me playing in bands. It was rock and roll bands, mostly alternative music, but I did play violin and keyboards. And you're looking at about a good $10,000 worth of keyboard stands, amplifiers, wires. I probably had a good $100 or $200 worth of just wires in those pictures. And of course, all of that was purchased with a credit card. I know I purchased a big screen TV about that time on a credit card. I went to a furniture store. I got a loan for a bed. I got a loan for a couch. And then I had this great, brilliant idea. It's like, oh my gosh, Brad, you're wasting so much money with having a boat payment, insurance for the boat, a car payment, and insurance for the truck. Why don't you sell the truck, sell the boat, and buy a car, and that way you can save money? Excuse me. Sounds like a really great idea. So I went out and I bought a Corvette Z06. And of course I got a loan on that, and I paid way too much money for it. So again, my debt is just growing and growing and growing. And then I took up skydiving, and that's me in the upper part of the picture there in the black, yellow, and blue jumpsuit. And I'm wearing about $8,000 worth of gear there between my main parachute, the reserve, the rig, cybernetic parachute release system, 2 altimeters. That's about a $275 suit I'm wearing right there. And as you can imagine, it was all bought with a credit card. So yes, Brad was dumb. Even with an MBA, chemical engineering degree, I've taken IQ tests. I score very, very well on IQ tests. But by the time I turned 30, I got out my tax returns, and I had earned over $1 million. But I was over $220,000 in debt. And I realized wow, finally the light bulb went off. I said, hey, I am trending in the wrong direction. I got to do something. I got to fix things. So I started learning, I started practicing, I started doing, and I started being successful with my money for the first time in my life there. And I wanted to put a picture here because I didn't think you guys would believe me. But that beautiful woman married me in May of 2008. We paid for the wedding in cash, paid for I think it was about a 10-day honeymoon in Tahiti, paid for it all in cash, no debt. We're completely done with debt. In March of 2010, we were blessed with our first child. In February of 2013, we were blessed with our second child. And I went to the hospital and said, hey, you know what? We have some savings. We have some money in the bank. What if I paid you now so I just don't have to worry about how much it's going to cost? And they said, well, you know, if you pay in advance, you get 20% off. And this was another realization that I had, and part of an article that I wrote we're going to talk about later, that guys, rich people pay less for the same things that everybody else pays for, that just by using cash. There's a lot of things that you can pay less if you use cash. And of course, if you use a credit card, even if you pay off that credit card, there's still sometimes surcharges. Vendors and people will charge you 2 or 3% more for using a credit card. And there's always that one time that may happen in 5 years where you forget to pay off the credit card and then they get you. So if you can pay with cash, you will pay less for the same things that everyone else does. And the fall of 2014 is when real life trading really started kicking off, and I made a note at that time. You know, we had our emergency fund in place. I had calculated what kind of rate of return we need for a successful retirement, and basically the retirement fund is funded if we can hit this rate of return. And we will talk about it here, calculate what rate of return you need. I think there's a lot of people here that are hoping for a successful retirement, but they don't know what rate of return they need. So we'll talk about how to do that and how to go get that. And we also had 20% equity in the house, and we are currently working on funding the kids' college funds. Guys, my kids are ages 2 and 5, and based on the last 25, 30 years of costs, it is expected that my kids are going to need $250,000 each for a 4-year degree at a public in-state school. So there's a quote down here that says, most people buy things they don't want with money they don't have to impress people they don't like. And this gets a lot of people in a lot of trouble. It's certainly what got me in trouble. So just wanted to share that with you guys. Be sure you're not one of those people. Be sure you're being smart with your money. Questions, comments, concerns, type them in. Otherwise, we'll move on. All right, how we learn. You guys are going to remember about 10% of the things that I say in this webinar. And that may get me really depressed, but it's not that bad. Think about when you learn something, you're going to get 10% by listening to people or by reading, 30% by discussing it, 60% by doing it. Imagine if you were learning how to ride a bike, or if you're trying to teach your kids how to ride a bike. You can't just tell them what to do, and then they're going to be successful riding the bike. They're going to have to ask questions. They're going to have to get up on that bike. They're going to have to do it. They're going to have to practice it. They're going to have to try it, right? You're not going to be successful with money just by reading a book. It's going to take practice. It's going to take some discussing with mentors, with other folks on how to do it. Same thing with learning how to swim. You know, you can't read a book and go out and jump in the ocean and swim with sharks. You know, you're going to have to talk to mentors. You're going to have to practice in the shallow end of the pool before you can be successful. Same thing with money. So all of that to say, real life trading will give you for free information and techniques to develop your skill, but you're going to actually have to work to develop this skill. Again, I see a lot of stock traders on here. You know, when you learned how to trade stocks, it wasn't just watching a video and all of a sudden, bam, you're a successful stock trader, right? You had to go out and do it a little bit. Do it with fake money, with virtual money. You had to ask questions, and you know you had to get help. Same thing with handling your finances and getting out of debt. The goal for most people is to become financially independent of work. Be financially independent of that paycheck. Be financially independent of the stock market, the government. Be financially independent of everything. Be reliant only upon yourself or upon your financial advisors for what you need. It might have been about 8 or 10 years ago, but the USA reported that Americans age 65, 97% could not write a check for $600. 97% could not write a check for $600 according to the USA Today. 54% were working and only 3% were financially secure. Guys, gals, people that are watching this video, please, please, please do not be unsuccessful when you get to retirement age. Create a plan. Be prepared. Spend less than you earn and understand the calculations that go into retirement before you get there. And then the question, you ask a lot of people, if you had $1 gazillion, what would you do? A lot of people say they'd quit their job. They'd only do the work they wanted to do. They'd travel around and they'd give to their family, for those kids that are looking at $250,000 for a 4-year degree at school. They'd go on vacation, they'd buy toys. There's two really big, huge opportunities I missed because I was not financially prepared. Number one was I had the opportunity to try out for the United States men's volleyball team, right? The Olympic team. I had that opportunity to go for a tryout in Los Angeles. The rules were if you made the team, and I didn't think there was any hope of making the team, but still, if I had made the team, I would have had to move to Los Angeles, and my starting salary would have been somewhere between $30,000 and $50,000. And in Los Angeles, with a really high cost of living, I think you had to live within 20 miles of the sports complex there. And it was all ridiculously expensive to afford that. But I had $220,000 in debt. No way I could have ever have done that. So I missed that opportunity. And it would have been huge. Another huge opportunity I had was the CEO of Blue Metallic Entertainment was coming to Austin, had come to Austin to watch my band play, brought Elliot Kahn, who was the manager for Green Day, a huge band, and they were going to sign my band. The contract was coming. There was the Austin Music Foundation was helping us negotiate the deal, and they were kind of being our agent, our representative through the whole thing. And basically, I did a little bit of research and figured out that with the debt that I had and the debt payments I had to make, I couldn't afford it. I could not become a professional musician and go travel and do all the big shows with the manager of Green Day, with the backing of Blue Metallic Entertainment, because I was not prepared and I'd made a mess with my finances. So be sure that you are better prepared when I was, when your opportunities come, whether they come now or they come at retirement. Whatever you do, don't be dependent on anyone or anything. Go crush it. A book that I read that changed my life is called The Millionaire Next Door by Stanley and Danko. What I learned in this book was that rich people tend to shop at JCPenney's and Walmart. Rich people tend to buy used cars. They don't buy new cars. Rich people tend to live in the modest neighborhoods. I had the idea that rich people lived in the really ritzy neighborhoods. They drove the brand new BMWs, and they shopped at Nordstrom's and stores like that. And this book did some analysis on the people with those spending habits and proved that a vast majority of the people that buy BMWs and live in the rich neighborhoods and buy in the fancy stores, those people are broke as a joke. So don't have postcode envy. Don't have, don't buy things you don't want to impress people you don't like, and certainly don't do it with debt, with money you don't have. So some things I got out of that book is that rich people spend less than they make. They avoid debt whenever possible. They do not use credit cards. Rich people do not use credit cards. They do not take out loans. So if you want to be a rich person, we need to start changing those behaviors. They have and use a budget for every single expense. They don't do anything. They do not incur any expense unless it can be approved on a budget. Rich people plan for expenses big and small. They do not go out for a sushi dinner unless their budget allows them to do so. And they prioritize the long-term expenses like, retirement over the short-term expenses like going out for a sushi dinner. I keep saying sushi dinner because I used to go eat sushi at least once a week. And I was ill-prepared for any opportunities that I would have liked to take advantage of, and certainly was on a train wreck for a retirement. Fortunately, I got things fixed, and I'm still fixing them. But these are habits of rich people. And then a while back in the news, there was another round of these new articles about how our society and how our government is going to go get the rich people, and how evil rich people are, and how rich people are bad. And it got me to thinking, guys, there's nothing our society is going to do that's going to make rich people less rich. There's nothing our government is going to do, because I came up with 5 reasons the rich get richer, and there's nothing anyone can do about it except join them. There's the link to the article. You can go to reallifetrading.com and click under articles, and you'll find it. But one reason the rich people are always going to get richer, and there's nothing we can do about it, is they spend less on stuff by using cash rather than debt instruments. It's just like when we were having our baby. I had the cash available. I paid for it in advance, and I got a 20% discount. In the next video, I'm going to show you dollar for dollar, when you buy a car, if you can buy it with cash rather than debt, you will also get about a 20% discount. It is mind-boggling how much things cost less when you use cash rather than debt instruments. Now, I know a lot of people, I've even read a book, or not read it, but I've seen a book that says become a millionaire by using credit cards properly. And I think that's just, I think it's awful, because, using credit cards to get rich is like playing Russian roulette. It's not going to work. There's going to be one time, even if you miss one payment in 5 years on that credit card because they lost your check got lost in the mail, got to make the payment, or for whatever reason, you end up upside down on that deal. So rich people are always going to get richer because they buy things with cash. They do not take out debt. Rich people have better investment choices. When my wife and I bought the house I'm currently webinar from, I remember seeing on the list a house that was $399,000, which is way out of our price range. But it was a 7,000 square foot house. It had 6 bedrooms. It had marble this and marble that. It had an indoor swimming pool. It was on 2 acres up in the very ritzy part of town. I'm sitting there I'm like, man, this ought to be a $1 or $2 million home. And I called my agent and I said, what's going on with this house? And he said, oh, it needs a lot of work. It needs toilets. It needs about 6 toilets, and it needs an air conditioning system. So I'm thinking 6 toilets, that's about $600 or $700, and AC, that's 30 grand. Okay, what's going on? And some rich person came, paid cash for it, and in about a month later, sold it for $1.5 million. So rich people have better investment choices. If you want to be a day trader and use a U.S. firm, you got to have $25,000 in the account. So if you don't have that money, then you don't have those investment choices. If you want to invest in a hedge fund, again, only rich people are allowed to invest in those high interest-bearing hedge funds. So the rich people will always have better investment choices than poor people. And again, there's nothing we can do about that except join them. Rich people spend less for insurance. So you buy insurance for things that are financially catastrophic, or that might be financially catastrophic. So let's say if I wanted to buy life insurance, so in case I die, I leave my wife a certain amount of money to pay for the services that I provide, as far as doing things around the house maintenance, mowing the yard, cooking, taking care of the kids. Let's say I would like to leave her $500,000 so she can invest that and spend less than that money grows. But if a rich person has $500,000 and that's all that they would need to leave their spouse, then they don't need to pay for life insurance. So rich people spend less for insurance because there's fewer things that are financially catastrophic for a rich person. And we'll go into those details in the 4th or 5th video. Rich people spend less than they make. They always have. That's how they became rich. 80% of millionaires are first generation rich. Right? Very, very few millionaires inherited their money. Most people went out and earned their $1 million. And they earned it, they made it by keeping their expenses less than their income. They spent less than they make. And if the government or society wants to do anything that increases their costs, then they're just going to reduce their expenses. They're going to spend less than they make. And that's how they got rich, and that's what they're always going to do. And there's nothing that we can do about it except join them. And then, of course, rich people understand that in order for them to be retired, that their savings has to grow faster than they spend the money. And again, anything that we do, anything that society does or government does to change their expenses, then they'll just alter their budget so that they will continue to win with money. So if you want to become rich, I suggest, go read that article, keep watching this video series, and we're going to get there. All right, what we will accomplish through the course of this video financial series, we're going to talk about the 3 necessities of every financial foundation. Everybody needs a will. Everybody needs a will. Everybody needs a will. You need proper insurance. We're going to talk about insurance you need and insurance you don't. Most people are paying an obnoxious amount of money for insurance that they don't need. You need a budget. Everybody needs a budget. We'll talk about how to build one and how to use one. We'll talk about how to get out of debt by paying off your debt, smallest to largest. Most people spend too much money on high interest debts when really they need to be spending, they need to pay off the small ones, because on most debts, I'm going to change that. On just about every debt, it's the fees that get you, not the interest. And we'll talk about how that works then. You need to build a 6-month emergency fund. And then number 4 here, guys, you need to calculate your retirement. If you're just putting some blind amount into your retirement fund, whether that's a 401k or an IRA or anything else, if you do not know what rate of return you need, we're going to fix that. Same thing for a kid's college fund. Don't just throw some blind amount of money. Calculate what you need, and we'll go through all the calculations on how to put all that together. Step 6 is pay off your house. And I guess I'll just talk about that. The house is about the only thing that you ever want to buy with debt. And the only reason is that a house is the only thing out there that you can buy that is very, very reliable to increase in value faster than your loan will grow. Just about anything else you can think of that you might buy with a loan will go down in value much faster. So the house is very likely to go up in value, and that's why a house, by putting 20% down, is the only thing you want to buy with a loan. And of course, we'll talk about that through the course of the series. All right. Here are the takeaways again. Success equals opportunity plus preparedness. Please become prepared. We're going to go through step by step through the video series on how to become prepared with money. Have a plan for your retirement. Have a plan for each paycheck. By the way, a plan for each paycheck is called a budget. Spend less than you earn. Start working on that one, and realize that retirement is only when that your expenses are less than your money grows, with an inflation factor in there. In the next video series, we're going to talk about inflation. Guys, through most people's inflation, prices are going to triple. So too many people are planning for the expenses at their beginning of their retirement. The cost of living will likely triple during the typical retirement. So if you're living off of $40,000 a year now, for you to maintain that same lifestyle, you're looking at $120,000 in 30 years. And we'll go through all the numbers. We'll talk about why that is. Okay, homework. Comprehend, understand, believe that you need to practice in order to learn the skill of being successful with money. Create a financial mission with your partner, with your spouse, with a mentor if you're single. But it's very important that you guys go in on this thing together. Too many times there'll be one half of a partnership that says, hey, we're going to do better with our money. And then they come up with a plan and they figure out what they're going to do. And then they spring it on the other person. And the other person says, wait, what? We're going to sell that. We're going to move. Wait, we're not going out to dinner. Wait, what the heck are you talking about? So start this with your partner, with your spouse. If you want to be successful with managing money, you got to do it together. And also it's got to be on paper. Nothing that's just, mentally tucked in the back of your brains or something that you agree with. Please put this all together. Talk about our current situation is, we struggle with money from week to week. If we're one paycheck away from bankruptcy. By the way, guys, when I worked for IBM, there was one pay period. This was about 1991, 1992. But I got a message from them that says, hey, by the way, you're not going to get paid. But your next paycheck at the end of the month will be double. And that was it. I didn't get a paycheck. So if you're one of those people that if you don't get your paycheck, that you lose your house, write that down as your current situation. How bad is it? What are the things that you're willing to do to fix your financial situation? when you are successful, what is it going to be like? There's a lot of people, and I've heard people that they made a minimum wage their entire life, and they get close to retirement, and actually earning minimum wage, they have amassed a couple of $1 million in their retirement account. I appreciate the messages, guys. Thanks for sending me the supportive messages. If you heard my cell phone dinging, those were more messages of love and support, and I appreciate it from every single one of you. But step 3 on your financial mission, what is it going to feel like when you're successful? How do you know when you reach your success goal? And then number 4, what are the steps that you're going to do in order to be successful? Watch the financial series. We're going to do these steps here. Take a shot at what you're going to do and be sure that you're in agreement with your partner. If you have any questions, please email me, brad@reallifetrading.com. Our mission is to enrich lives. I hope by watching this video that your lives have been enriched. Guys, I'm at the end of my presentation. If you have questions, thoughts, concerns, opposing views, go ahead and type those in. Dad, thanks for being here. Thanks for being a help. For those of you watching the video, thanks for watching the video. Again, email me, brad@reallifetrading.com. And I see some people are typing in. Team Money, I appreciate you being here. Thank you. Thank you, David. You guys rock. You guys are always there to help me in my stock trading. Marcia, thanks for being here. Marcia is also an awesome stock trader that's been helping me out. All right, guys. Well, I appreciate all the kind thoughts. I appreciate the messages. I appreciate you being here. This will be up on YouTube and up on the website and up on Facebook here in a couple of hours. So thank you guys for being here, and I will leave everything with my traditional farewell. Guys, trade on logic, not on hope. Thank you, guys.